Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at CVS. This is CVS Health Corp. We're going to go ahead and see if this stock deserves to be $60 plus or $59 or lower. We're going to see what institutions and hedge funds are doing and look at potential price targets for an entry or sell point. And we're also going to hit that subscribe button and jump on in. All right, so this is our chart for CVS. It is trading at the same levels as it was back in 2013. So in the last 11 years, if you held this, you are disappointed. That goes all the way back to 84. Crazy. Okay. Let's just go ahead and look down here. Wow. Okay. I did not expect this. All right. All right, look at the sales. This is beautiful, amazing. EPS, beautiful, amazing, with the caveat of 2022. We don't really know what happened there because the sales looked really good. Shares outstanding looks like they are continuing to go down. Looking at our, let's look at the technicals really quick. Strength, low, momentum, almost turning around. Money flow is going up. This makes sense. As money flow goes up during this momentum turnaround and potential reversal, that makes sense. The relative momentum indicator is low, meaning if there is a momentous move, it might be short-lived. And we do have a gap from 66 down to 60. So potential gap close at 66 if this stock can make a 10% move in a day, which I don't know if it's that volatile. There are 1.25 billion shares float, which is quite a bit. Let's just take a peek at the other metrics here really quick. Wonderful dividend. However, like I said, you're basically underwater in this stock unless you bought it before 2013 and you're up and you've been holding it and didn't sell at 114. You didn't sell at 108, and now you're down to 59. So it is undervalued currently. In the future, it gets cheaper. Looking at our quick ratio, that is concerning because if CVS had to close their doors tomorrow, they would not be able to pay off all of their debts, loans, notes, obligations, essentially, unfortunately. They do offer a juicy dividend. Sales past 5 years, solid. I mean, it's just resilient. Gross margins 14.9%. Institutions own 81%. We're going to challenge that and see CVS. We're going to see if institutions are loading the boat here because based off of these numbers right here, it's undervalued. Gross margins pretty weak. They're barely profitable, barely. This is a little concerning, but we're going to go ahead and run my handy dandy calculation here. Let's just clear it out for a nice clean calculation. So market cap is 74 billion, 70 million. It's huge. Income is 7 billion, 320 million. Sales is 361 billion, 350 million. Absolutely insane. Yeah. Okay. Let's go ahead and look at their cash and their debt. I want to look at their revenues really quick. So Q1 2024, they did 88.4 billion. Q1 2023, they did 85 billion. So they did increase over 3 billion, 3.1 billion. Good for them. Good for them. Let's check out their cash situation. They have 13 billion in cash, which is almost the lowest they've ever had. Almost. Last quarter was lower. 13 billion, 140 million. The debt is 73 million, 430, 73,436,000,000. Okay. And just really quickly, total assets 249.7 billion. Total liabilities 175.5 billion. So we do have about a $74 billion buffer. I do like that. I do like there are insider buying. I don't think the last couple of videos I did there was barely any insider buying. So this is a breath of fresh air. A breath of fresh air. So very cool. Edward Ludwig. Yeah, okay. No beige flags yet down there. My only beige flag, red flag right now is the quick ratio. And the margins. The margins, come on. I'm gonna take you back down really quick. What's going on with their margins? I want to find out. Margins have gone down. Used to be 17%, now they're at 14.2%. They continue to decrease. I don't know if that's because employee costs are going up, medications going down, um, or whatever else they offer. Interesting, just very interesting. So their margins, we want to see their margins go up. They do have earnings coming up here very soon. So we want to see margin improvement. That's number one. If they can get margin improvement back, I think this stock is golden. Okay, back to our calculation. Shares flow is 1,250,000,000. And just a heads up for people who don't know this channel, this calculator does not account for the dividends that they pay out. They are giving some of their free cash flow to shareholders as a dividend. So this projected stock price is going to be a little bit above what it really should be. And in this case, it might be a bit above because it is severely undervalued. And with that, we have a stock price of $306. Wow. The only way that makes sense is if institutions and hedge funds are adding insanely. Because if they see what I see. So 81% institutional and hedge fund ownership is old data. New data, drumroll, 95, a 14% increase in institutional value. Vanguard owns 117 million shares. Holy cow. They added to their position by 0.13%. BlackRock actually decreased 9.98%. Senior internet. What's my computer trying to tell me? I'll take a senior discount. So this is severely undervalued. Analysts have it at 67.99. I have it at 300. That's pretty up there. 13 billion, 73 billion. Yeah. Okay, let's check this out. I want to see CVS. I want to see what's going on here. Oh, my future self is thanking my past self. All right, I think this is good. This is worth me taking a bite. Every time CVS is on this bottom channel, it rises. Wow, right to the T. I don't know when I drew this. I wish I could find out. But this is perfect support right there. Wow, with that bit, how much? 409 million shares traded. We haven't seen that type of volume since 2009. To the upside, the last time we saw that was 2007. Holy cow. Yo. Yo, yo, yo. Yo, that's what? What? Okay. So we got our down channel rise, probably, maybe, I don't know. Very interesting. I think this is worth taking a nibble. I mean, it has never fallen below this channel. What I'm tapping, it's never fallen below this. As far back as 2020, 2003, 21 years. It has not fallen below this channel. Wow. I think the risk right here is the risk reward. Adding 5-10 bucks a week here, if it falls through, adding 5-10 bucks a week. I mean, this is a pretty good, this is a really good opportunity in my opinion. I know this video doesn't come out for probably another week and a half, but if I do, and when I do buy this, you'll see me post it in my YouTube community page. So don't feel like I'm finding gems and then purchasing without you guys knowing. I post when I buy these or if I like them, so you'll be aware. Um, and earnings are actually coming up soon. I think it's worth adding 5, 10, 20 bucks. I think it's worth it. I'll do it. I think I'm gonna do it. Yeah. Okay. So that is my, and let's, sorry. So I mean, in terms of support, the stock has never fallen below this channel. Um, but if I had to say, hey Ryan, it's gonna fall, where's our next support? It's gonna be here. Come on, right there. It's gonna be at $52 if it does fall through. And I can say 52 confidently because we have support and resistance. Well, more so resistance over here. 1, 2, 3, 4, 5. It's been tested as support 6 times. So I like it at 59. If it goes down 52, I think I'm gonna have to nibble on it. I would take a nibble at 52. I really, really would. So that's what I've got for you. In terms of moves up, I mean, the high is 111.25. Go there. This low is 52.77. We'll go there. You know what? I think we may have found a bottom. Okay, and I say that the Fibonacci works in wonderful ways. Perfect support over here gets tested as support here. Falls through, tested as resistance. Falls through, perfect support. Falls through, perfect resistance, perfect resistance, perfect resistance, perfect resistance. Yeah, I like this. I like this a lot. So pretty good chance I add to this one before this video comes out. It'll be posted. The trade will be posted. I would add it at 59. I would add it at 52. And that average right there is a $7 average divided by minus 350 is the midpoint. So my average would go down from 59 to $55.50 if I purchased one share and one share from 59 to 52. So anyway, I'm just doing some stupid math. Yeah, I like the risk reward here, and the gap is up. My target to the upside is 66. That's where this gap is filled. Is this a once in a generational opportunity to add? Maybe. I think the big question is doing your research on the CVS locations that are going to be opening and ones that are closing. I'm not familiar enough, and I don't have much interest or inclination based on what we see here to really give me the butterflies and want to really dive in head over heels. Gross margins are not attractive. Quick ratio is not at 1, kind of a red flag. They do offer a dividend. I think they need to cut the dividend, not to be mean to people who buy it because of the dividend, they could be putting this money towards getting their balance sheet back in order. They're very cheap. Uh, we do see some insider buying, which is a good green flag, but we also have some major selling 2.2 million, 1.9 million, over $4 million worth sold with less than 700,000 bought. I mean, and that's just, these are individual people, these aren't the company. So you have to recognize value when you see it. Um, so that's where I'm at here. I think this is a good area to take some nibbles. Don't buy all in. Take some nibbles and just pay attention to this company. Um, Obviously, we want gross margins to be back towards 15, 16, 17, 18, 19, 20, 30%. Maybe there's a turnaround coming. So again, I like the exposure. It's down, gosh, it's down quite a bit. This year it's down 25%. So it's on sale. So yeah. If it did get to 66 in a short period, I don't know if I would hold to get that dividend or sell to get my quick gain and move on. So those are future me questions I don't need to worry about. Again, if this falls 59 to 52 to 40s, I think it's something to nibble on. Um, yeah, I mean, time will tell. So if you made it this far, thank you so much for watching. I hope you're doing well. Take care.